the introduction of the uninvested cash element in a lot of these accounts is like enormous, because it just gives you that like a little bit of safety. Oh, I don't need to then pull that out, put it in a cash ISA just to get something off it. You can just leave it in the account ready to go. And I like having a little war chest. I always have 3 to 5% in cash, and I'm probably pushing a little bit higher than that now.
Welcome back, welcome back. So my good friend Sammie Ellard-King here is usually the one who's doing the interviewing, but the tables have turned today, sir. Welcome to Trade Live with IG.
Thanks, Rich, man. I'm really happy to be here.
Yeah, it's great to have you involved. So those of you that don't know then, Sammie has been running the Money Gains podcast for 153 episodes, one of which I was very proud to be part of. And we got another one coming up on Monday.
Yeah.
How did you first start? How did you come up with the idea of podcasting?
Podcasting really, so for me, we have a content business. One of our streams is the podcast, and we like meeting people where they want to learn. So some people like listening, some people like reading, watching, and so we operate in all those spheres. So I'm a podcaster. I learn everything that I know off podcasts, and shows like this or things that are online. I prefer listening rather than watching. I'll have it on in the background, but I'm very much on my headphones doing the dishes kind of thing, and I'll learn during those times. So that's why we did it, because also selfishly I meet great people, yourself one of them, of course, and it's great for networking, but I also learn so much as well, which I wouldn't necessarily have perhaps ever even have thought about. So it's different people's perspectives, which I can then put into our own content as well.
And I guess, because I think of you as the better Stephen Bartlett, basically. And take us through some of the guests that you've had on there.
Yeah, we've had Andrew Craig, so author of How to Own the World. Brilliant guest, always does extremely well. Good friend of ours, Michael Taylor from Shifting Shares. Hilarious episode, actually.
Yeah,
I love him.
He's got such a dry sense of humor. It's brilliant, isn't it?
You don't know it's coming with him, and then he just says something, and I'm like, oh my God, that was hilarious. And then I laughed because I was so shocked at the way he delivered it. And he's great.
And that's a dream for, of course, your boss, Danielle, is in the house today, filming in the back behind the cameras. And that's, getting those cut downs is perfect for those kind of snapshots, isn't it?
Yeah, that's a big thing of what we do. We like sort of cutting the little clips up and taking little moments out, and that brings in new people into the show. And so it's just been great. Like we hit the top 3 UK business podcasts last week.
Wow.
Just insane. And so it's been one of them things. Podcasting's hard, like it's like a hockey stick. Like investing and compounding, it really is. It is exactly the same. It's almost identical to my own investment portfolio is the journey of the podcast.
Right. And that's because word of mouth just accelerates the number of listeners.
Yeah, and it's just really hard to grow. But then once you get that breakout episode or someone like shares it and it goes viral, then you can really sort of take off. And if you keep doing that, eventually you get a big hit. And that's what happened. We had quite a big viral clip go, and the listenership just flew up almost 3x overnight. It was crazy.
Wow. And so who was the viral clip then?
Andrew Craig.
It was, yeah, because he's, so take us a bit, for those of you that haven't heard of Andrew Craig, a fantastic book that you might want to order. But yeah, take us through Andrew's, what you learned from him on that pod.
Yeah, so it's really interesting. Obviously, we were unpacking Rachel Reeves in the budget, and the impact on working people, like vicariously, essentially. Like it's not obvious that it was impacting working people, but when he laid it out, it was quite obvious it was. And I was just really enamored by his perspective on things. And then one of the ideas that he had, obviously, as we know, the UK stock market has had a real problem with IPOs and money flowing through it recently. And so he had an idea of getting money into small cap businesses, because small caps, medium caps are finding it very difficult to raise.
Love the idea.
So he had the idea of £5,000 for every child when born invested only into small UK cap businesses. And you can add to it kind of like a junior SIP, similar to the Gordon Brown's Child Trust that was out in the 90s.
Oh, I didn't know about that one.
They gave £500, but it was poorly invested and it wasn't in the right places. So some people actually ended up with less than what they put in on minus fees, which is just wild, right? So that is really important.
Because it was ring fest, wasn't it? So it was
exactly.
So £5,000, even if it's 2.5, like, you know, but invested in UK small and mid caps.
Yeah.
And when the child retires at 55, then it was estimated it would be £1 million, right?
Yeah, £1 million for each child. And the incredible thing was it's actually only £3 billion for the government to fund a year, potentially even less, which they're spending on 1.2 trillion at the moment. So it's a very small amount.
Yeah.
And then that compounds. So actually there's more money going into UK business, and it's just such a great way to fuel the economy.
Yeah. This is the great thing. And then, of course, we all know there's no way that we're getting a state pension kicking in at 67 years old. You know, it's going to be 75 by the time we get to that age. Sammie will obviously get there before I do. But let's touch on the irony of the name. So you've got three sets of businesses. There's the Up the Gains, which is the content. There's the Money Gains, and then there's a new one, the Gains app.
Yeah.
But the irony being that you haven't been gaining yourself, have you? So Sammie was a big old chap. And how much weight have you lost, Sammie?
Yeah, 35 kilos now.
35 kilos. I want to lose about 3.5 would be a good start, to be honest.
Yeah.
But that just shows the discipline that you're prepared to put in, not just in those businesses. And, you know, so you deserve everything you're getting there. But it's the same discipline that you can put in to something like weight loss. Is your stock portfolio as disciplined?
The stock portfolio is even more disciplined.
Right.
Even more disciplined. Like, yeah, with the weight journey, it takes a long time, and you do have the occasional cheat days. Like, but I don't tend to cheat with my investments as such.
Okay.
So it's crazy. Like, one thing for me is the old cliche of wealth is health and all of that. But when you're building something and you're working extremely hard on, say, you know, a business or stock investment portfolio or anything like that, and it takes a lot of time, there's always some level of sacrifice which you have to take. And if you're putting a lot of time into your investment research, it's going to impact the amount of time you spend with friends or family or whatever that might be. And the thing for me was I gave up my health a little bit to build the businesses. And then I'm on camera quite a lot.
Yeah.
So you start noticing it. And I was like, I've always been quite a healthy and fit sort of person. And so I was like, something's got to change. But it took 18 months. So it took a while.
And the first 6 months you were going through the gym and thinking you could do it that way and exercise, but it's diet, isn't it?
It's diet. I you know, that you always think like, oh, it's so cliche again, it's boring, like listening to these fitness influencers, like 90% of it's your diet. You're like, oh yeah, whatever, I'll out-train it, 100% will. And you won't. And so as soon as I got my diet dialed in, actually weirdly, like, that happened rapidly from that point. And also you feel like really energetic, you sleep better. And it's crazy because the moment that I started doing the diet thing, it's almost like at the same time, the business started really kicking on as well.
Because it's not a coincidence, is it?
No, you're making better decisions.
I know my boss Sophie's going to say, why is he talking about diet? But it all feeds into mindset.
Exactly.
Right? And I can tell my portfolio, my positions, even, you know, the interview on air and everything, if you're not in the right mindset, then everything starts to fall apart. And it doesn't fall apart at once. It's a gradual thing.
Exactly.
And if you see your portfolio start to fall apart, then there's a tendency to take more risk because you're losing a little bit. And when you're only losing a little bit, you think you can solve that by taking more risk. When it starts to fall apart, that's when you should be cutting and cutting and cutting.
Yeah.
What in your own investments, you're slightly different in that you don't do short term, do you? It's
occasionally. So we'll do the occasional swing trade, but our swing trade will last 6 months.
Yeah.
So we'll find a very undervalued company which is so obvious, and that we'll get in knowing we've got a target for it, and when it gets there, we're out.
Any examples?
One that you kindly gave me, which we've held a little bit, but we've taken a little bit off the top. Nike is a good example. Marks and Spencer's another one that we jumped into and did really well out of. That we held a touch longer, so that was actually just under 18 months we held for. But we're out of that now.
So that would have been from sort of £1.50 up to £3 kind of thing. Oh,
Yeah.
brilliant. Well done.
And we did really well out of those. We've had some losers in there, of course, or ones that we've just had to stick with because they haven't moved.
Yeah.
But you know, it only takes one or two winners, and that's the way that we like doing things. But you're right, like we like selecting smaller, not smaller, you know, these are £1 billion market cap companies, but they are smaller in terms of comparison to your Magnificent Sevens, etc. We hold them for 3 to 5. So we're really targeted about where I place. I say I'm targeted about where I place. Like I don't go into biotech or green energy or these things because I don't understand them. And so I spent all day in fintech and all day with e-commerce businesses.
Yeah.
And so I have such a better understanding of those spaces than others. So I stay right in my own lane. And if Dave down the pub tells me about this fantastic new company which is going to moon, I just forget about it.
That's the one to avoid, isn't it? And I just fear, we have a wonderful Discord, and this has been started by one of our viewers, Maturin, and it's going really well, and it's built up to now 100 people. But the guests that we come on do talk about smaller companies sometimes. And we've seen, you know, Smarter Web, and I certainly, you know, got involved in the Smarter Web. The smaller companies, when people are passing around ideas on things like Discord and Reddit, you know, always a good example. They're great in bull markets, but boy, oh boy, do they come off hard in unbull markets, let's say. It doesn't necessarily have to be a crash or anything like that. But liquidity dries up and disappears.
Yeah.
Have you had any shockers where you just suddenly, why is it down 20% kind of thing?
Yeah, look, it happens all the time. And I think that's what we need to say and have that and bear that in mind is, you know, you're going to go through corrections, stock market crashes. We all know the numbers, and you know, it's every 3 years, it's going to drop by 20% or more. And so that you've just got to be wary of that. It's how initially when you start investing, you perhaps take on a lot more risks than you're actually physically comfortable with.
Yeah.
And then once you realize and you have these drops and you're like, oh, I don't like that, I'm going to de-risk myself a touch now. And that's why I follow the 80-20. I like 80% in index funds, 20% is fund money. And that's the way I call it.
Right. And that's 80% of your total investment pool, or your SIP or ISA, or?
Total investment pool in index funds. In my pension, for example, I'm just straight index funds. I just leave it, let it do its thing. Occasionally I'll come in and out of touch or go more to cash and pull back up. Usually after listening to you, Rich, in all honesty. So it's been good recently. The main thing is really for me is I used to be 80-20 the other way around, and I went through multiple drops and crashes and just didn't really enjoy those periods as much. So right now we're actually more about 70-30 because we had some storming growth from some of the companies in there, but it will be time to rebalance, I think, very, very shortly.
Right. Palantir?
No Palantir. No, it's just not in my lane. So I tend to stay away. The only ones I have got in, for example, is Nike, like we've mentioned, is just I buy everything Nike. Danielle in the studio will know, like my entire wardrobe is Nike, and I've had to stop buying it because basically give them all my money. But I love the trainers, and so I just love the business, and so that was a bit of a different one for me. But Marks and Spencer's, I'm sure you mentioned earlier, people might say it's retail, but actually a massive part of that business is e-commerce, and they started to turn around online massively at the time I got in. And they brought a new fashion designer in, and they started bringing Reese and Jaeger in, and it was.
I only noticed that last week that they've actually got brands now.
Yeah, loads, and the stores are amazing. If you go in there as well, like menswear in there, it's just phenomenal. So yeah,
potentially time to take advantage of the cyber attack that they went through recently.
Really interesting. The stock price didn't move much during that period, which is quite like eye-opening.
It's telling, isn't it?
Yeah.
Okay, back to your podcast then. So 153 episodes. I'm sure, you know, it took a bit of time to get going. But of everybody that you speak to, is there a recurring theme when it comes to investment and managing your money? Is there a real thing that sticks out that, you know, perhaps the viewers could benefit from in their investing as well?
Yeah, it is the same thing. But every year, we've had some investors that have come in that have been doing this 30 plus years, and every single one of them is just like always says, you just got to be patient. It doesn't happen as fast as you want it to. And they've made most of their returns. We've all seen their own Buffett returns after his 65th birthday, but it's so true. And people just completely forget that, and they think that they're different, and the fact is that they're not. And so you just have to be patient. Yes, you're going to have a great year, but it's going to be followed by a bad one or a stagnant couple. And so I think people get really carried away and just need to lengthen their
horizons.
Yeah, and gratification and the way that it works.
Well, this is life as a whole, isn't it? And it takes us back again to the eating thing, right? It's that instant gratification that people are chasing. Chasing more than 25% gains in a year is going to be problematic. We had a long conversation on the podcast yesterday and before the podcast as well. It was probably more heated off camera than it was on camera. And in the art of investing, we have had a really incredible 2-month performance. Now, we're getting close to our target for the whole year. Is the whole market demonstrating some kind of greed at the moment?
Absolutely.
And, we know what happens next, don't we?
We do. And you came on the show and said it was going to drop by the amount that you said it was going to drop, and it happened within 3 days of that show. And we had to rush to get the episode out because it was so timely. And we've seen the indicators; they're all showing it's extremely overvalued at the moment. And I think it's time to perhaps protect yourself a little bit. If that was me, I'm not saying that's not financial advice, of course, but I think it's grown to like insane levels again. All the indicators are showing that, and so I think it's a little bit of a time to just perhaps evaluate what's going on, and if you've got any sort of wide open positions.
I always love, especially on Fridays, I love when people take their balance at the moment, right, what the account is sitting at, and then right now take that number by 20%. How does it feel to be looking at that number 20% lower than your peak?
Yeah.
Are you happy with that? If that doesn't really disappoint you, then you can still take risk. But if it does disappoint you, time to rein it in.
A good way at the moment is a lot of these accounts are giving you interest on uninvested cash. So ask yourself,
IG, 4%.
Exactly.
Yeah.
So ask yourself if you're happy with almost like the inverse of that. Well, if you went in some of it in cash and you made 4% out of it, or you lost 20%, yes, you're not getting your 10, 15, 20% gains from that point on.
Yeah.
But your protection at that point when you can see that the indicators are showing. So I think the introduction of the uninvested cash element in a lot of these accounts is like enormous, because it just gives you that like a little bit of safety. I don't need to then pull that out, put it in a cash ISA just to get something off it. You can just leave it in the account ready to go. And I like having a little war chest. I always have 3 to 5% in cash, and I'm probably pushing a little bit higher than that now.
Because life can be expensive, can't it?
For sure.
And if only there was an app which helped life be a little less expensive.
I like what you did there. Yeah, exactly.
Now, what is this new what do they call it? String to your bow.
String to the bow, yeah.
Yeah, tell us about, maybe we can get it up on screen as well, Gains app.
Thank you. Yeah, so we have spent a lot of time making content in the space. We deal with people at mass scale. We do about 130 million views a month at the moment. It's nuts. And so with that comes a lot of data and a lot of questions, and we are seeing what people are struggling with most. And yes, we know more people should be investing, but the day-to-day management of their money is a massive, massive problem. Yeah. And so we've created a budgeting and cashback app, which is powered with AI and open banking. So essentially we can personalize someone's spending insights. So you can essentially download the app. It will be out later in November.
Right.
And you connect your banks. You get a 360 view of your money, your savings accounts, your credit cards, your investment accounts, exactly what's going on. but then the AI can analyze those and give you insights and things to do. But it can also then save you money on the front end. So when you're everyday shopping, if Rich goes to Tesco, I go to Sainsbury's, it's going to know that, and it's going to give you instant cashback offers.
Aldi for me.
Aldi for you. Yeah, I'm more Waitrose. I do apologize. So it's really cool because it's the day-to-day spending of your money. At the moment, what you would have to do is you'd open your banking app, your budgeting app, you'd have a spreadsheet or a bit of paper, and you're writing out how much things. Here you can just come on and go, how much have I spent on takeaways last week? You can actually talk to it as well.
Right.
And it's going to go, bing, you spent 74 quid in these retailers. And so it's going to really have that sort of instantaneous view around your money.
Yeah.
Getting you the answers that you want to kind of help you plan ahead for those bigger things, those moments or those investments that you want to make as well.
So out in November, but you can join the wait list at the moment.
You can indeed, and you can get every single person that signs up to the wait list gets entered in to win their shopping paid for an entire year.
For a year?
For an entire year.
I'm sorry, I'm not Aldi. I take it back.
You can go wherever you want. You can choose it. So we'll pay for your shopping for an entire year. Yeah. So you'll be one lucky person.
That's unbelievable, right? Everybody on the wait list, come on, you got to share it, right? If one of our viewers wins it, I want some involvement in that.
Free shopping.
Have there been any funny moments on? Go on, take us through your...
It's Michael.
Is it really?
It is Michael. He said something that just got me at the core because it has its funny side, but what he said was quite powerful. And he was saying, you should shop local and stop giving money to big corporations.
Yeah, he hates.
We were talking about Starbucks,
yes,
and how his literal hatred for it. And then he dropped the bomb that the coffee tastes like burnt cigarettes. And I was like, I couldn't. It was one of those moments in the studio that I couldn't stop laughing. We had to stop recording because the way he says it is so dry. But unfortunately, because it's a money podcast, it's not like a comedy show. I think a big thing is to tune into Rich's episode and watch his prediction.
Well, we got another one. We're just
The timing is perfect again because we seem to be at almost exactly the same point. So it's be interesting to run through this time.
Actually, I'll have to watch it back before Monday to make sure I just don't say the same thing again because it feels like it. But let's take a look at Starbucks because I've had a couple of very smart people, including Julian Wheeler. Starbucks is one of his favorite shorts. And that's the second really smart person that I've heard. So, not just Michael talking about how bad the coffee is. This thing is showing really poor price action compared with what the S&P is doing. And I just want to keep that in your mind because Julian thinks it's going to 60. I could definitely see it at 70, which is a good sort of 12% lower. Starbucks, Julian's point is that it's going to have to shrink to start growing earnings again. He cannot grow earnings off the current base at the moment. So,
yeah, well, they're closing a lot of stores and they got rid of a lot of staff, especially in the UK. And it doesn't seem to be getting much better across the world as well. So it's a very interesting one to be looking at in terms of that at the moment for me as well.
Yeah. So, anything else any other stocks or companies or indices that you've got your eyes on at the moment?
So I'm not adding at the moment. I'm being very careful. I've kind of got my positions. I have a lot in fintech in the US. I have the likes of SoFi and dLocal and Upstart as well. I love those types of businesses.
Take us through some of those. Sorry, I don't know SoFi.
SoFi are almost like the British Monzo. The American Monzo.
Mm-hmm.
They have a wide berth of current accounts, but they also have kind of like an embedded IG into them as well. They do crypto loans. They started out as a student loans company,
okay.
And then have developed a sort of full financial suite. The CEO, Anthony Noto, I find very impressive. And it's that real challenger bank. And I think the US at the time was kind of ripe for that, as we've seen with the rise of Revolut and things like that as well across the world.
Yeah.
I think the US was really ripe at the time. And I've had it for quite some time now. And every time it drops back down, it's had an incredible run.
It really has.
And it's one of my favorite holdings.
For anybody watching, that was $10 back in the April sell-off, and now it's 28. So 280% return. Nicely done, sir.
Yeah, it's been great, and we will continue to add anything above sort of 15 for us, because I think that at below 15, if it drops anywhere back down at those levels, like, we will be very hungry.
Yeah,
because it's growing.
And we do have to touch on that, in that I'm 100% cash at the moment. Anybody now, that is really making a strong statement to, I think we get a correction. Don't know if we get a crash, but we get a correction.
You're 100%.
100% cash as of last week.
As of last week?
Yeah. SIP, ISA, pension.
Oh, you went big.
100%.
Oh, interesting.
Yeah.
Okay.
So
We've been
I should have
creeping
kept
it
that
up
for Monday.
by the day. Yeah, no, fair enough. I'm going to have to ask you about now.
Would you? And I'm not pretending I can call the top, so it might go on for weeks yet. In 2017, going into 2018, I was a month early. But then we got a 10% correction in a day. Right, and that's what it feels. That I feel like we're building up towards that.
I have a question for you, if you don't mind. What do you think the catalyst will be?
He can't help it. The interviewer.
100%. It's just I was discussing this yesterday with a couple of people, and they had different answers, and I'd love to know yours. So, like, what do you think is going to be the trigger this time? Because the last one was Trump.
Yeah, and this came up in our own podcast yesterday in The Art of Investing. We were saying there's no way you can ever guess what the catalyst will be, but you can certainly watch out for the canary in the gold mine. And that's what we're going with at the moment. It's obviously gold has, in my opinion, has now become a risk asset.
Yeah.
The First Brands credit implosion, right, is a mini SVB moment. And the market has not blinked, right? You've had a huge business which has cost private equity and the banks, in the hundreds of millions. So I do think that is that the start of something? Maybe in 3 months' time we see more private equity deals that have gone really bad, and they actually have to write the real figures down. So leverage, private equity are certainly two potentials.
Interesting.
Sammie Ellard-King, thank you very much for coming in.
Thanks, Rich.
And it's been really interesting. Money Gains on the YouTube channel. It's easy to find, isn't it?
Yeah, very easy, yeah.
Sammie, we'll see you Monday.
See you soon.